All right, guys, let's jump into the weekly recap. So, not much has changed here. Pretty much generally a total chop fest this week, though we did close pretty strong here Friday. So, if you look at it from this perspective, we're still stuck in phase one of the squeeze, where, yeah, Friday was a good-looking day, but still a bunch of nothing here. We're still stuck under that +1 ATR extension. So, the +1 to -1 build-up of energy phase, once we can potentially start getting through +1, that's the release of energy phase. So the S&P 500 is pretty much still stuck. If you look at the Qs, right now Friday's a good looking day, but we're still stuck here. Nothing much really changed. So structurally, everything still looks good. Let's check out the Dow. Even with Dow's nice little pop on Friday, you're still stuck in this squeeze. So we didn't really go anywhere this week, but if there is one positive, we're still looking at good-looking charts. They still have bullish structure. I still think over the next handful of weeks, we get into phase two of the squeeze, energy releases to the upside, and we're pushing into brand new all-time highs. So with the chop fest here this week, going back to last weekend, so last Friday, in the options room, we did that Iron Condor on the NDX for this Wednesday's expiration. So the goal there was take advantage of the premium decay over the weekend, plus a free day of premium decay, since the market was closed on Monday, and that trade worked out pretty well. Now, I'm not sure what the hell was going on Wednesday morning. It took a good 20-30 minutes for the NDX to start trading, so that was a little bit sketchy. However, we did buy that Condor back for about 80% of max profit. So that was a pretty good weekly income trade. So that's about 3 or 4 weeks now in a row where this Iron Condor has been treating us really well. And then for the directional trades, so with Caterpillar here, good looking squeeze, and I actually think, I think Caterpillar's poised for higher prices here. However, over on the 20th or the 18th, 19th and the 20th, in the options room, we started building our position with a couple of put credit spreads, both of which we closed this week for 75% of max profit. So the beauty here of the credit spreads is Caterpillar didn't so much make a directional move. Went a little bit of a move here from the 21 to +1. So what's that? Maybe, right, it moved $10, right? Nothing crazy, but the benefit there of the credit spreads is if the stock can simply hold its structure, so we're selling puts at 235 on one of those spreads. Ideally, you sell the spread, the stock explodes, and you live happily ever after. But one of the benefits of the spread is that even if you don't so much explode and make that 2-3+ ATR move, you're going to get paid with the passage of time. So not much happening here with Caterpillar, but as 1, 2 or so weeks goes by, the puts that we sold are losing premium. So you get a little bit of a move with, of course, the premium decay with the passage of time. You're collecting 70-75% of max profit. So 2 profitable trades here on Caterpillar, good for a couple $1,000, but we didn't get the move we're looking for. So no complaints here, but I do think on a dip, I'm looking for more Caterpillar. And if the market can finally fire the squeezes, I think we're going to see Cat into 250, 255-ish. So looking for more Caterpillar there, but it was a trade that required some patience, but relatively low stress stuff. And then for Google here, so for Google, we're selling the put credit spread a few weeks ago back inside the daily squeeze. And same thing, we got a pretty solid move here. So we're getting long around 22.90. We're getting out here on Friday around 23.90. So you cut $100 of upside, pretty solid. But the move hasn't really unfolded here. For Google, with the daily squeeze, the squeeze in the Qs, looking for a move into brand new all-time highs. Call it 24.60. It's right around that 3+ ATR extension. But with Friday here, I get a little bit of the dip on Thursday. It's just a dip to the 21, nothing that ruins the structure. And with a nice bounce on Friday, we were able to buy back that spread for 75% of max profit, which on my 25 contract trade was a good $15,000 profit. So did we catch a huge move? Not necessarily. You caught a pretty good move here, but by selling the premium, you're walking away with 70-75% of the max profit in a few weeks here. So for Google, nice $15,000 trade. And if we can get a little bit of a dip here, I think you look for more Google. So that's basically the general theme here is looking at the indexes. They did nothing last week, but they held structure. And I'm looking for moves into brand new all-time highs. So I still like Caterpillar. And I think on a dip there, I'm looking for a little bit more. Looking for, a little bit more Google. so we can get some more exposure here on the options room. And then a few more good-looking setups. I mean, IBM looks beautiful. Get a little dip there. I think you can take a position. Not trade advice, just kind of what I'm thinking. I think Costco has a beautiful daily squeeze as well, so keep it simple right now. Costco looks a lot like IBM. IBM looks a lot like Microsoft. All these good-looking daily squeezes, but what they're waiting on is the overall market behind them. And Microsoft is another good example here. Good-looking squeeze. We're back and forth between +1, -1. It's holding structure, but it's not making that move into 260 plus yet because the market is going nowhere. So I think you got to practice patience here. Say you're swing trading something like a Microsoft. The back and forth +1, -1, it can be a little frustrating if you let it be frustrating. But the most important thing here is that it's mirroring the indexes. So if the SPY and the Qs were ripping to all-time highs here and Microsoft is doing nothing, then that's a bit of an issue. But as long as it holds structure, as long as it holds up on its own 2 feet, you're waiting on the market here. So Microsoft, IBM, Costco, Google, Caterpillar, all good-looking charts, but the odds of them making a move higher, those odds go through the roof, I think, once the market finally fires these squeezes. So those are the things I'm focusing on. Pretty good week here with the Condors, with Caterpillar and Google, and now I'm looking for the next best opportunity. So in Sunday's video, we'll get a little bit more into the details of, how could I trade Costco? How might I trade Microsoft, a Google, etc. But till then, enjoy your weekend. I hope this week went well for you. If you haven't already, go ahead and subscribe, and then make sure you subscribe to the free newsletter. Get the link here in the description. The Sunday video I put here on YouTube is 10, 12 minutes long. The video you're going to get if you sign up for the newsletter, which is free, by the way, the Sunday video is about 20 to 30 minutes long. So if you want more detail, kind of get into the dirty deets of the strategy here, go on ahead and subscribe. But as always, I appreciate you.